Hey, I want to show you guys something here. When you're day trading, there's a reason that you should be looking at all of the different time frames, looking at different markets, and kind of seeing what is going on with the overall market when placing a trade. Today, I'm going to show you how a gap fill on another market, on another ETF, was the key for the market to pull back at open and then boost to the moon. I'm going to show you guys right here in this video, so make sure you guys stay tuned.
Yeah.
What's going on, guys? You know, I talk a lot about gap fills here on this channel. We talk a lot about the idea that when these gaps are on the chart, they create this basically like area of no resistance, no support. It's just like free air, like just floating through space there when you have these gaps in the chart. And when I'm talking about a gap, I'm basically talking about when the market closes the previous day at a certain level, and then the next morning during pre-market we get a move higher, and then when the regular hours open at 9:30, the market is at a higher price, so we get these gaps in the chart. You can see this area here from the 378 up there to 381 on the SPY. You might be wondering, like, okay, well, Patrick, you trade the Qs, you trade the NASDAQ. Why does this matter that there's a gap in the chart on the SPY, right? Like, why does that matter? If you go and you start to look, okay, we pushed up on the SPY, we pushed up, then we ran into resistance. Yesterday, the SPY pulled back to this 381 level. Remember, 381 was right where we gapped up at. But remember, we now have this gap in the chart. So if we go to the bottom of this candle and we draw this line across here, what do we get? What do we get? Well, look at that. Basically, yesterday's support at the end of the day was right there at that bottom or the top of that gap, and then we had this big gap in the chart from the 378s till the 381s. And you can see this morning, guess what happened? Look at this thing. This morning the market filled that gap perfectly. It dropped from the 381s down there to 378 and then pushed back up. So very important, guys. No matter what market you're trading, if you're trading stocks, you're trading a certain stock, let's say you're trading Apple, things like that, take a look at these things. Look at the SPY, look at the Qs, figure out, is there any gaps? Are there any gaps in the chart that you should be worried about? Are we opening at a level that's right above a gap? Are we opening right at a level that is being supported right there at a gap? Like I said, you had a gap from that 381 to down to the 378s. That's $3 or $4 on the SPY. That's a pretty big gap in the chart, and that's exactly what happened today. We got filled. Now, the thing is, if there's a gap to the upside as well, you know, gaps to the upside can also play in our favor as well. If we get a push up and we have a gap in the chart, that's basically saying, like, hey, there's a lot of room to push higher, to fill that gap. So we normally get fills to the downside and to the upside when it comes to gap fills. The problem for a lot of people is that they think that gaps are going to get filled right away. These gaps don't always get filled. You're going to have days like this where we pushed up with that gap did not get filled. You know, you got 1 day, 2 days, and then almost here getting filled on this third day above that gap, and then finally today filling the gap. And you can see now how we're actually, like, the price action is interacting perfectly with that overall support where that gap fill was, and then the top of that gap. So we're basically now trading inside of this previous gap here on the SPY. And well, that obviously affected the Qs as well. You can see this morning the QQQ selling off from the 283 level down there to 280s, and basically filling that gap following the SPY. So the SPY sold off at open, and the Qs, the NASDAQ, followed the SPY. And then you can see once the SPY started to push back up, once we filled the gap there on the SPY, the S&P 500, we then got that push back up on the Qs. Moral of the story, the lesson here is no matter what you're trading futures, you're trading stocks, you're trading options, always be looking at the chart. Do you see any gaps in the chart that are close to where we're at in terms of opening and closing the market, things like that? Are we pushing off of a level that's right above a gap in the chart, or are we pushing up to a gap in the chart? That's one thing, you know, like I'm constantly looking here at the chart. Are there any gaps, right? Do we have any gaps that we should be looking at? We got a gap down here at the 278 right now. You know, we had this gap up here. There's always gaps. Like, there's just constantly gaps in these charts. And normally the price action will end up pushing to those gap levels to kind of find the buyers in those pockets of air. Like I said, it's like basically having like a pocket of air there. And you can see like we filled, here's another example from the 275s. We had this gap from the 283s, 275s on the Qs back there June 16th. We gapped down. A few days later, we pushed back up. We pushed like to the right up into that gap. And then the next morning, we actually gapped up and then filled that gap. And almost like we kind of needed to fill it again, which I think we have another gap here. At a gap in the chart, we gapped up. Well, guess what? We filled that gap yesterday. We talked about that. You can see the price action here. When we broke this level here, that 290 level, we sold. And guess what? We filled that gap perfectly. So normally, like I said, when those gaps are in the chart, you're going to have these kind of waterfall movements or break the upsides based on, you know, that gap getting filled. Basically that just open air in the chart. And you can see, boom, we got down to that gap, filling that gap there. Even though it was a smaller gap here, that gap is still there, and it's going to obviously impact the price action of the ETF or the overall market here. So definitely keep an eye on the charts and always be looking multiple time frames. I like to look at the 15-minute, the daily, look at the bigger time frames when it comes to these ETFs. If you're trading stocks in general, I would always have the SPY pulled up. I would have the Qs pulled up just so you kind of see, like if I'm trading a certain stock and all of a sudden the overall market starts to go down, well, there's a good chance that if it's a big stock, you know, Apple, Tesla, things like that, well, it's probably going to go down as well based on the overall market that day. Because remember, you know, these ETFs are basically made up of the top stocks, a lot of stocks that you guys are trading. So keep an eye on it, even for the small caps, medium caps, all that. Definitely always keep an eye on kind of what the overall market is doing. So I can't preach to you guys enough how important it is to kind of give an overall look, you know, look at the overall charts, get an idea like where we're at, what's going on. Are we near a gap? Is there a gap coming up? Are we pushing up to a gap level? Are there gaps in the chart? And normally, like right now, especially with the market that we're in, we're getting a lot of gaps, up, down, gaps, you know, pretty much like I feel like every other couple days, we're getting these gaps in the chart. And then we're getting the price action basically pushing back to those gaps or, you know, filling those gaps to the downside. So it's something to definitely keep in mind. You know, if you're like sitting here at open and all of a sudden you're looking like, okay, I'm going to get long, but then you notice that there's a gap in the chart to the downside, you know, that might keep you from taking a bad trade. It may take you, you know, you kind of switch from maybe thinking about getting long at open to maybe being like, well, you know, there's a gap in the chart. Do I want to get long here or do I want to wait to see if this gap gets filled? Maybe you get short. So think about that. Always kind of thinking about where those gaps are, what the overall structure is on the chart. What is the chart telling us? Is the chart telling us that there's a pretty good chance that we're going to pull back and fill that gap? Is the chart telling us that we're going to push up and fill that gap? Always be thinking, where are the gaps? Be mindful of the gaps, my friends. If you guys haven't already, do me one favor, hit that like button, subscribe button, all the buttons down below. I'll talk to you guys later on.